Chamber of Tax Consultants welcome you all for the finest of the finest day we were waiting for, the release of our Compendium Transfer Pricing. This is a book publication where we all were waiting because it's a mammoth task ranging of 2 years. All the people who had come together and brought it to the day what we were all waiting for. We are lucky to have this book forwarded, reviewed by our own Dastur Sahib, and we could have asked none other than Porus Kaka sir to come and inaugurate this book. And also our own Vispi sir, who being the backbone for this book, has agreed to be a keynote speaker for today's evening. So see the dedication our Porus Kaka has. He's sitting in the airport lounge and therefore Chamber of Tax Consultant because he was committed for this evening. So not taking much time, now I will request our President Ketan Vajari to say something on this occasion.
Thank you, Rajesh Bhai. Good evening, everyone. Respected Senior Advocate Porus Kaka sir, respected Shri Vispi Patel, the keynote speaker for today's session, Rajesh Bhai, Kirit Bhai, Isha, of course, other office bearers of the chamber with me, seniors and friends. It's really a pleasure for the chamber, as Rajesh Bhai mentioned, that we are coming out with this publication, a compendium on transfer pricing, which is spread across 2 volumes, more than 2,800 pages, which is written by uh, more than 140 authors, and having 75 chapters. So such a mammoth task, as Rajesh Bhai mentioned rightly. We are really thankful. We are really very glad that Sri Porus Kaka is going to release this publication for all of us today. And I really salute you, sir, for the commitment which you have given. Despite of having so much of busy schedule, sitting in an airport lounge, you are doing it for us. So we are really glad for that. This publication, friends, has been, of course, as Rajesh Bhai mentioned, has been a process which was going on for quite some time, almost around 2 years, and therefore, to an extent, we should be accepting the fact that it has taken some long time. But let me tell you that the time has been taken only with the purpose that we should give the best and nothing less than best. So, a lot of deliberation has gone into right from conceptualization stage to discussion. So many filters, so many things has been done, and entire committee has been working in a relentless manner for coming out this publication in a most efficient manner. So my full compliment to all the team, the committee, for coming out with this beautiful publication. Just to name few of them, Shri Anish Thakkar and Shri Hinesh Doshi, past presidents of the chamber. Of course, the immediate past chairman of the committee, Rajesh L. Shah, the present chairman, Rajesh T. Shah, many others, in fact, Namrata, Hina, Ujwal, Bhavesh Dedia, and so many of them. So, I would not keep on naming everybody, but then, so many of them who have put in their heart and soul into this publication. So, thanks to all of you, we are having this publication in our hand. Of course, let me mention, special mention let me make about Shri Kirit Dedia, who is the backbone of this publication. He has been coordinating for this publication in a very efficient manner. Every time any issue is there, Kirit Bhai was always there. So, Kirit Bhai, thank you so much for always being there and putting your all the best efforts for this publication. Full compliment to you. Of course, the mentors of this publication, Sri Vispi Patel, and today also we are going to have the benefit of his wisdom about the transfer pricing subject. So, Vispi sir, thank you so much for always being there. And Karishma madam, she is also both of them have mentored this book in a very efficient manner. Of course, the biggest thank I would like to give to Sri Dastur sir, who agreed for writing a forward. We know how much busy Dastur sir is there. We all know, and despite of that, when we myself and Rajesh went with a request to Dastur sir for this forward, he immediately agreed. He went through I think most of the articles. He has gone through many articles, and thereafter he has given his valuable forward. So we are really thankful to him. We all are amazed with the enthusiasm which he carries today also, despite of being such a senior professional. The enthusiasm which sir carries brings a lot of energy, brings a lot of motivation to all of us. So we are really thankful. And what best can be the situation, such a worthy publication getting released at the worthy hands of none other than Sri Porus Kaka. So, such a beautiful evening we are all having here. And I am sure that all the readers of the publication will be educated, will be benefited to a great extent. the authors have put in their lot of experience into this publication, and I'm therefore sure that there will be a wonderful treat for all of the readers. Despite of that, if at all any suggestions are there, any criticism are there, we are always welcome. Please feel free to communicate to us, which will improve us to have better publication next time. With that, I think I would request Isha madam to take the proceedings further. Isha, please.
Good evening, everyone. It's my honor to introduce Mr. Porus Kaka, who actually needs no introduction at all. But just to do this introduction, so Mr. Porus Kaka is a senior advocate who completed his LLM from Harvard Law School as an INLAC scholar in 1991. He has completed his education from Cathedral School and Sydenham College, and he qualified as in first class as a lawyer from the Government Law College. His experience includes he's been the worldwide president of the International Fiscal Association from 2013 to 2017. And today he is the designated honorary president of the International Fiscal Association. He's a designated senior advocate by the High Court. He's called as barrister to the Bar of England and Wales. He's a trustee of the International Bureau of Fiscal Documentation. He's ranked by the Chambers and Partners consistently as one of India's leading senior tax advocates. The international face of Indian tax practice by the Chamber and Partners of 2021. He was awarded the Client Choice Award in 2011 by ILO for corporate tax law in India. He's named as one of India's leading tax councils by the International Tax Review. He's India's representative on the Permanent Scientific Committee of the International Fiscal Association from 2004 to 2011. He was appointed as an expert witness on the Indian tax law in London and international arbitration. He was appointed on the editorial board of the World Tax Journal published by the IBFT. He's a senior counsel for major multinational and corporate groups, accounting firms, individuals. He's a frequent speaker and writer on international and domestic tax and other corporate law issues in India and abroad. He has also joined the Field Court Tax Chambers at London. So thank you so much for being with us today evening, and over to you, Mr. Porus Kaka. Thank you.
Thank you. Thank you. Thank you to the President, Mr. Vajani. Thank you, Isha, for your kind words. It is truly an honor for me when I was asked by Rajesh Shah to be able to release this book. This is a spectacularly elaborate book. It is 75 chapters running into 2,700 pages across 2 volumes. And the volumes are divided into the scheme of the Transfer Pricing Act, which includes FAR analysis, attribution of profits to Ps, and also methods and valuations of shares and intangibles. Thereafter, it proceeds to a sector-based analysis of the automotive sector, the jewelry industry, hotels, logistics, etc. I have been associated with the chamber since my junior days, so I could not refuse Rajesh when he asked me. A few facts which I have gleaned not only from the book, but by the foreword that has been done by my learned senior, Mr. Dastur. Apart from the details of this is the 41st publication in the Chamber's 25 years history. And the Chamber is now in the 96th year of its existence. And in 4 years now, it'll complete its centenary, which is truly a landmark achievement. In this book, you will find comments not only by leading practitioners, both chartered accountants and lawyers, but also by revenue officials. And I think this is in true IFA style that you have every single sector represented. The only sector that perhaps next time, if you come out with edition, is from a judge who decides transfer pricing. When I look at some of statistics, just to give you encouragement, till 2011, the Finance Ministry used to publish statistics on transfer pricing litigation in India. So it started out by 1,220 crores, and in 2009-10 financial year, it had reached 70,000 crores. Now, when I look at 70,000 crores disputed litigation in one financial year, I can come to only 2 conclusions. One, either we have wholly dishonest assessees, or 2, we have totally arbitrary assessments. Perhaps the answer is halfway between the 2. From 2010, the finance ministry has stopped producing these statistics. Perhaps it did not look nice in the international arena. So then we have no exact method to measure the litigation, but there is a cup available. And the cup is probably what the litigation practice is there. Today, transfer pricing now involves nearly 65 to 70% of my practice. Some of the critical events over the years, the OECD comes out with transfer pricing guidelines. They started coming out slowly. 1995, 2010, then it now starts speeding up. 2017, and now already in 2022. So the first was after 15 years, the second was after 7 years, and now the last is only after 5 years. So you can see how these publications are also coming out. The only difference is, as you see the 2017 and 2020, they are becoming more subjective. When they become more subjective, they become to a certain extent vague. And recently, the Federal Court of Australia in Commissioner of Taxation versus Glencore rejected the reliance on the guidelines. And the court says, these are hopelessly or very highly generalized and frustratingly opaque. We can't get the answer from them. 2 more judgments, if I may say. Recently, the US tax court in Coca-Cola decided a dispute of 1.8 billion. In Altera, the dispute of the Australian tax court, in the US tax court was on a cost sharing agreement. And again, it involved more than 80 million in each year. Only on one issue in India, investment advisor versus investment advisory, an asset manager, what are the correct comparables? You have currently 88 judgments of the tribunal reported in tax. You have more than 15 judgments of the High Court reported, and I am aware of 1 Supreme Court judgment. All I can say is this is an extensively critical area. This is an extensively litigated area. This compendium, which is a mammoth task, as you heard from my previous speakers, who have given work of over 2 years to bring this to fruition, will be a very, very valid thing for those either engaged in the litigation, those engaged in preparing the studies, or even for the revenue officials engaged in enforcing the orders. And perhaps it may be extremely useful if the chamber also gives it to the judiciary who decides these matters. With these few words, I want to thank the chamber for giving me this honor for releasing this book. And I think it will be a very useful asset on the bookshelf to every single person engaged in this field, whether as a practitioner, whether as a corporate, or whether as an adjudicator, be it a revenue official or be it a judicial officer. Thank you again.
Sir, now I will request Porus Kaka, Vispi sir, President, to officially release this book.
Of releasing this book on behalf of the committee and on behalf of the chamber. And thank you again for being here.
Thank you so much, sir. Thank you so much.
Thank you very much, sir.
Thank you. Rajesh, I will take your leave. Thank you very much, everyone.
Thank you. Have a safe flight, sir.
Thank you very much.
Sorry, I was a little delay in the opening of the book. Thank you.
No, sir, you are at the right time.
Okay.
Sir, before Isha introduce Vispi sir, which again doesn't require any introduction to this audience, still let me tell you from my heart, sir, this book is all because of you. You are the mentor, architect, and a smiling face says everything. Whatever and whenever we have come, Vispi sir is there for Chamber of Tax Consultant and specifically the International Taxation Committee. So, bit little emotional.
Thank you very much for the kind words, Rajesh and Isha and Ketan. I'm always there. It's my passion to see that we try and do something for the profession. And I'm reminded again of the vision of the chamber, which was quoted by Shri Soli Dastur Sahib also, that the chamber shall contribute to the development of law and the profession through research, analysis, and dissemination of knowledge. I think if we all professionals, both young, my peers, and my seniors, if we keep this in our mind, then the world will be more enriched with everyone's effort. And I would also like to thank Kirit for his hard work to see that the publication is published, always coordinating with people. And we should also thank when the publication started, it was with Anish, Hinesh, and Rajesh L. Shah, and Born to Fructification by Ketan and by Rajesh P. Shah. So it gives me great joy. And I should also say that along with me, my colleague Karishma has also been always there to try and see that we try and guide all the authors and try and help to see that this publication bears fructification. With this, I'll just try and address a little bit about transfer pricing. There is enough in this book covering more than 2,700 pages, covering 75 chapters and more than 150 authors. So what can I say in this short time? I'll just try and share my few thoughts on transfer pricing with you all. So actually the journey of this book started in 2010. In 2010, the first publication was Practical Guide to Indian Transfer Pricing, in where we had the message from our late beloved Mr. Patel and also by Mr. Dilip Thakkar. So there was a message in that book. Then it was in 2014 that we had transfer pricing and industry and technical perspective. And now we have a compendium. What is a compendium? It's a collection of articles, it's a collection of knowledge, and so that it can be disseminated. So I think the word compendium is the correct word to use today, because it covers a mammoth subjects, a galaxy of subjects, right from the law to the future of the arm's length standard and to the industry-wise analysis of the various sectors, some global perspectives, some global case laws, the judicial precedents. And as our friend Porus said just now, it is a highly litigative subject. And therefore, to that extent, this compendium will be an aid to the academician, to the practitioner, to the chartered accountant, to the lawyer, to the judiciary, and to the people who adjudicate. And I hope that all the readers are enriched, and they enrich us with their comments back to the chamber. So this is the history of this publication I just gave you all. And so we are also extremely thankful to Soli Sahib for giving his foreword. And now let's try and see what is the history of the arm's length standard. The history of the arm's length standard started in 1924-28 by the US and Canada. It was first legislated in Section 45 of the Revenue Act in the US in 1928. And Section 45 also tried to see that the transactions of a controlled taxpayer are akin to that, or are in parity to the transactions of an uncontrolled taxpayer. That Section 45 then gave room to Section 482 under the 1954 Internal Revenue Code of the US. And internationally, this particular subject of transfer pricing was first initiated in Article 5 of the draft convention proposed by the League of Nations in 1935, report of the allocation of business income between states for the purposes of taxation. And today we have that in Article 9 of the OECD Model Convention and Article 9 of the UN Model Convention. So what's the heart of transfer pricing? The heart of transfer pricing is that the controlled transaction should be a mirror image of the uncontrolled transactions, and they should mimic what the transactions would have taken place between independent parties under similar economic conditions. So that's the background of transfer pricing. And that's how transfer pricing law has evolved over a period of time. And then you had the various OECD guidelines on transfer pricing, starting with 1979, when only 3 methods were published. That are the direct methods, that the comparable uncontrolled price method, the cost plus method, and the resale price method. Then came 1995, which was an answer to the 1993 US regulations, where for the first time they introduced the profit-based methods. In the US law, it is known as the comparable profits method. In the OECD guidelines, that is known as the transactional net margin method. And then you had the profit split method. And then you had the frequent changes in the guidelines in 2010, 14, and 17, and now in 2022. Between 17 and 22, we had the BEPS, the Base Erosion and Profit Shifting Initiative of the G20 countries under the aegis of the OECD under the aegis of the G20 countries. And then you had Action Plan 8 to 10, which was incorporated to some extent in the 2017 commentary and is incorporated in the 2022 commentary, where now the importance that is being given is given to the delineation of the transaction, the controlled transaction. What is the delineation? Identifying all the economic and commercial characteristics around the transaction, trying to understand the commercial rationality of the transaction, giving importance to value creation, especially in the transfer of intangibles and in the actual conduct of business. And therefore, to some extent, does it become too subjective? Is something which only the law will evolve and tell us? And therefore, today, the importance that is being given to the form, not the form of the transaction, that's the legal form, but is being given to the substance of the transaction. And therefore, now we come to a situation in today's economic scenario. What do we find? We find that international commerce is being taken over by international e-commerce. And the experience of nations in the last decade is that the large technological companies, like the Amazons of the world, Google, Apple, and the others, have the economic and the political clout to arrange their business affairs in a manner whereby the countries which are actually paying for and where their products are being consumed, products, services, they are not in a position to subject to tax these large technological behemoths for many reasons. One is that the existing rules of international taxation of taxing non-residents in source countries has been limited to certain types of transfer of intangibles by way of royalty, fees for technical services, or business income is only taxed when there is physical presence. And therefore, what we find in the latest phenomena is that countries all over the world do not want to miss an opportunity to tax these profits generated by these large technological companies, have brought in unilateral rules. So we have, for example, the equalization levy, we have the significant economic presence test, And you have the Google tax in the UK, and similarly other countries like Australia and others are also wanting to tax these countries. So you actually have now these technological companies who are mostly, I mean, more than 50% of the revenue of this country, of these large e-commerce platforms is centered around companies who are incorporated in the US. You actually have governments doing the bargaining for these technological companies. And the turnover of these companies and the profitability would put to shy many countries, small countries' GDP. Such is their economic and political clout. And therefore, you had the evolution of how do you tax and how do you try and see that there is some fairness in the distribution of tax revenue in the source countries. So you have this now new controversy which will take place, not controversy, you have a measure which will lead to controversy. So you have this pillar 1 and pillar 2, which is being discussed and trying to be legislated and trying to find a methodology whereby you do not deprive the countries where actually these services are being consumed, these products are being consumed. Just now, for example, due to COVID and the lockdowns which have been installed on various on the citizens and in the countries due to the spread of this pandemic, you had Netflix, for example, and Amazon and other platforms whereby a lot of entertainment and media was being consumed. So therefore, this pillar 1 and pillar 2 tries to address these problems and tries to address how will this be taxed in the days to come. And therefore you had pillar 1, which tries to find out what is the level of and which is that profit which is to be distributed by various methodologies, whereby you give normal return or routine return, and then the residue profit over 10% of the global profit earned by these large multinational groups, where the benchmark is more than $750 million or euros, whatever it may be, which is the benchmark. Beyond that, then how would you distribute the profit? So let's say beyond 10%, they say that now consensus is that 25% should be redistributed. And then you have the global minimum rate, which has been sort of accepted. But most important, friends, is these are all global measures. When these global measures are dovetailed into domestic law is where the controversy arises. It's one thing to have a philosophy or a policy of international tax, which is agreed to by various nations. And it is another thing when that policy, when that initiative is legislated into domestic law and the taxability in the source country is not dependent upon the international policy, but it will be dependent upon how that particular policy is legislated in domestic law. And some people may ask me, how does pillar 1 and pillar 2 have any consequence in transfer pricing? We'll try and see, and we'll try and discuss that particular perspective. So what do we find today? So today, there is an aim by governments across the globe to try and make tax policy equitable and efficient. But sometimes pure economic efficiency is at cross purpose with national interest. So therefore, sometimes this particular struggle between source and resident countries or between technological companies who earn revenue but try and use various methodologies to center these profits in low tax countries and not pay tax or pay lower than the economic threshold tax which should be paid in source countries. you have this particular struggle between residence and source countries. This struggle between residence and source countries has got nothing to do with the arm's length standard, which is the universal standard for trying to equate cross-border related party transactions in a manner and determine that the correct profit or the correct income is attributed to these transactions in the countries where the transaction has taken place through the associated enterprise or the related party enterprise. So there is a difference between the struggle for trying to get and harness more tax revenue and trying to equate it with the arm's length standard. So therefore, many a time we see in international tax literature this perspective of what is the future of the arm's length standard. Will it give in because to a fractional approach or a formulatory approach? Or will it, or does it have the ability to withstand the vicissitudes of business, the ever dynamic change in the way business models are evolving in the new age world? So this is something which we will discuss for the next couple of minutes. To understand the future of the arm's length standard is to understand first the economic and philosophical basis, which is what is the true basis of the arm's length standard. So the arm's length standard is an impartial standard. It says that controlled transactions should mimic or be a mirror image of uncontrolled comparable transactions. So comparability is not in the nature of the transaction alone, but it is also in the economic and commercial conditions prevalent around the transaction, which is typified in transfer pricing literature as a functional asset and risk analysis, which I say is actually the economic analysis of the transactions, which the OECD says is the actual delineation of the transaction, and trying to equate that transaction, how would independent parties have actually transacted. So the Black Laws Dictionary says that the arm's length standard is actually the standard whereby independent enterprises in their self-interest would do a transaction. So it's a transaction which takes place in the marketplace under normal business conditions. And therefore, when we see and visualize this arm's length standard, we find that it is actually an extremely holistic standard, because the standard is based on trying to compare a controlled transaction with an uncontrolled transaction. And when we see that comparison, then what we actually see is that is there any lack in the standard? Is there anything which needs to be done to improve the standard? Or is it that in the implementation of the standard by both the tax administration and the taxpayer, and due to the intransigent positions taken by the tax authorities and the taxpayer, that you have controversy around the standard? So many a time what we see is that both tax administration and the taxpayer would very quickly come to a sort of a understanding or a value judgment and say that there is a lack in the standard, when I actually believe that the lack is not in the standard or in the central philosophy of the arm's length price or the arm's length standard, but the deficiency probably is in the intransient positions, opposite positions sometimes taken in the implementation of the law itself. And that is why you have a plethora of litigation. So therefore, when you see and you visualize transfer pricing and its central philosophy, which is the arm's length standard, then there is nothing that is lacking in the standard. But what is probably required now is that the standard should be able to absorb all new age business models, and therefore the stress which is given to function, assets, and risk, which we call economic analysis in transfer pricing, the stress should also be given to where the products are consumed, where the services are consumed, and where actual revenue is derived from. So therefore, when developing nations expect more revenue because they are the source of the market, then the arm's length standard should also be wide enough, flexible enough to absorb the market conditions from where the revenue is being derived, so that the standard becomes more holistic. So when one visualizes the philosophy of transfer pricing, when one visualizes the actual evolution of the arm's length standard, we will see that the arm's length standard is probably the only standard which is not affected by any prejudice, because it is based on impartial principles of comparability and of benchmarking, which are universal in nature. So what is required is a better understanding of its implementation and a better understanding of which method to apply. So probably even methods will undergo an evolution, and therefore in our Indian law, we have the other method under Rule 10AB, which I believe is a progress by the administration, because it allows the benchmarking to be done in a manner which is more practical and less rigid than the cup method. And therefore, we will see that even methods will evolve with time so as to absorb the dynamic changes in the business model as we move ahead. And therefore, in the coming days, as the arm's length standard will be challenged by various commentators, it still will remain, in my view, a pure standard, because it is an impartial standard, which is based on impartial methodology of comparing controlled with uncontrolled transactions. So the hypothesis is correct, and its actual implementation is also correct. It's only that when positions are taken by taxpayers and tax authorities that you find this tension which takes place. So what would be required is there should be a global consensus of even how to apply this arm's length standard, at least the principles by way of an analogy, to even these new age business models, to see that source countries are not deprived of their fair share of revenue and taxes. And why does fairness and equity in an international tax system become very important? Because it is before our eyes that COVID-19, the pandemic, has completely disrupted economies. And by economies, I do not mean the stock exchanges, because they are not a true barometer of the economic condition of the general people and the citizens of the world, forget only one country, merely because some few technological companies have been able to take advantage of and reap the benefit as a black swan effect, they would say, and make bumper profits. What has happened to the general public? They have been devastated. People who could not work from home, industries which require human touch, like the airline industry, the transport industry, the entertainment industry, the hotel industry, they have been devastated. People who could not and did not have the skill to work from home, they have lost jobs, not only in India, across the globe. So here we come to the understanding of equity and fairness of a tax system. If there is equity and fairness, then you will see that all these profit-making companies, if they have derived profit from various source countries without having physical presence, how would they be taxed in these countries? And I believe that if there is a global consensus in Pillar 1, because if Pillar 1 is only fractional and formulatory based, it will be controversial. But if it has the mingling of the arm's length standard by way of an analogy, then probably you may come to some solution whereby you can have a fair system of taxation. And then our greatest challenge to the arm's length standard will be the benchmarking to be done in this pandemic. So what are the questions that will arise? The questions that will arise is, how are losses to be attributed to the entities? So you have this particular phenomena in international trade and commerce, whereby the parent entities opened up subsidiaries in source countries, either to source cheap labor or knowledge by way of outsourcing in the IT and ITES industries or in the manufacturing industry. And they were termed as risk mitigated entities. And because they were risk mitigated entities, the arguments that were always placed, which may have been economically justifiable, is that they may not take risk because they are being compensated on a cost plus level at net level. So all their costs are being absorbed. Now in this pandemic, when the parent company itself is not in a position and has lost market share, lost revenue, how will it compensate these risk mitigated entities? What will be the position taken by taxpayers? What will be the position taken by tax authorities? Would they continue to earn returns irrespective of the fact that the parent entity has not been able to get the market share, or at the risk of closure of business? Would tax authorities take intransigent positions to say that they should continue to earn that earmarked return, which may have been as per past assessments, which may have been as per an advance pricing agreement entered into, which may be unilateral in nature or bilateral in nature or multilateral in nature? So these are questions which will come up now in the years to come, and the greatest controversies will happen. There will be restructuring of transactions, especially financial transactions. If the Reserve Bank of India and the central banks have made negative interest or very marginal interest, what happens to intragroup loans, guarantees? How will they be benchmarked? Will tax authorities accept the reality of the world that there were moratoriums given, rates of interest had to come down? Otherwise, the very entity may not be even in a position, forget pay interest, to survive and give salaries. So these are the questions that will come up when we benchmark during this pandemic. What happens to the economic losses that have taken place in the downturn? Would there be flexibility in the arm's length standard to absorb these standards? What type of benchmarking will you do? We have been doing historical benchmarking. Here, we would need to do dynamic benchmarking. Today's data of comparable is not available today. It's available after 1 year in the public domain. So how will governments react to that? Will they allow post facto benchmarking to be done in a manner which absorbs the vicissitudes of the changing world in this pandemic? How will they allow returns to be modified, transfer pricing studies to be modified? And will there be a global consensus? One country allowing, one country not allowing will lead to extreme litigation. What happens to government assistance programs? How will they be factored into transfer pricing? Are some of the issues that will take place as we move ahead. And with this, friends, I don't want to take up much more time. I hope I have been able to just lay the global scenario, the future scenario, which I think is going to be extremely interesting, but extremely tenuous, because this pandemic will result in a plethora of litigation unless countries take some more practical stand and taxpayers take more practical stand. The OECD and the UN have come out with certain guidelines on comparability, what should be done, how do you mitigate. But as we have seen, positions taken by governments may not be as flexible as these recommendations or the advisory given by the OECD and by the UN. And with this, Isha and Rajesh and Ketan, thank you very much for giving me this great and credit and everyone that I could come and deliver this keynote address. I'm thankful to the chamber, and most important, thankful to everyone for bringing out this publication. To all the authors who are present, I can see a few authors. I can see Karishma, I can see Sanjay, I can see others, Suresh and Anvesha and others, and Vaishali. And I hope that this turns out to be a great publication and useful. And now Hinesh is also there. So nice to have Anish and Hinesh also. And wish you all the very best. And thank you for all your efforts. And with this, I say thank you to all of you.
Thank you. Thank you.
Now, before Kirit takes it over, as mentioned by Vispi sir, that this all book related work started during the tenure of past president. I'll request Hinesh bhai, past president, Anish bhai, past president, to say a few words about the book. First, over to you, Hinesh bhai.
Thank you, Rajesh bhai. Vispi, my dear friend. Our journey for this book started with the first edition when my predecessor Natubai Thakrar was chairman of International Tax Committee, and the book was half complete. And Vispi said, this is a very nice book, very nice initiation done by Natubai. We should complete it. And that was the birth of the first edition actually. The name was different. It was Indian Guide to Transfer Pricing. And that was the first book ever available for the chamber. And Vispi was the one who helped us complete that book. That was the birth of the first edition. That led to the second edition when I was the chairman of the International Tax Committee. We had a fantastic book. And when I became president, the idea was started for the third edition. In all the edition, Vispi and Karishma, I think, were the common factor. Karishma was very closely involved with second edition. But third edition also, she has played a very big role as a mentor and to prepare the entire index and topic. So I thank you, Vispi and Karishma, that we could see the light of this book when you had structured the entire publication. We have 2 editions and a fantastic team. And I would mention few names like the past president Rajesh P. Shah. We have Kirit Dedia, without whom the book post receipt of authors would have never been possible. It is only Kirit Dedia
Thank you. Thank
who
you.
has done the last legwork, which was the most important. Really.
Yes.
And we are indebted to Kirit Bhai for that. And everybody who has worked, in fact, the president, vice president, Anish, who supported, continued. We had series and marathon of calls which Anish used to attend and follow with the authors to complete the book. So I give my congratulations to the current president and the chamber for coming out with this excellent publication. Thank you very much.
Anish bhai, over to you.
Thank you, Rajesh. Today is a day where I feel extremely proud. And I say so because the chamber today has 2 compendia, one on international tax and one on transfer pricing, which I believe are a must-have in the library of any student of international tax. And I say so with a great deal of pride because, as Hinesh rightly said, and he has always been instrumental in bringing out all of these publications. But if you see how these publications have actually evolved, they have transcended presidential terms. They have transcended different chairmen of the committees who were bringing out, who were heading these international tax committees when the books started and when they actually brought out. And, the team, right? Each and every person who contributed has done so with, extreme unselfishness, full dedication, full passion. I mean, Vispi Bhai and Kirit Bhai, I believe, are 2 examples, as well as Karishma. I think 3 examples of this compendium, right? Unflagging enthusiasm all throughout. And, without these 3 people and without Hinesh, I would believe that this book would never, ever have come out. So is the case with the International Tax Compendium, where, it was a labor of love, again, started in Hinesh's term and brought out, in the term before this one. So really, I believe that this is the legacy that the chamber actually has for all of us. This is what our seniors have taught us. Be unselfish in the pursuit of knowledge, be dedicated, try and do something where the chamber leaves behind an indelible mark for the generations to come. And I believe that these 2 compendia, very honestly, have actually done so. My deepest gratitude to everyone, and maybe I may miss names, so I'm not naming anybody, but I would believe that everybody who was associated with these 2 compendia, and particularly this one, because we're releasing this one today, deserves a lot of, and our immense gratitude, our heartfelt gratitude for his or her contribution to these compendia. And I believe that, as we move to our centenary year in 25-26, publications like these, right, will set apart the chamber from, the other institutions. Of course, we'll be the first institution in the tax professionals world to reach this magical figure of 100 years. But I would still think that it would be work like these, deep research publications, deep research papers, useful to one and all who want to learn the subject, which will set us apart from the other institutions. So today is, as I said, a day where I feel extremely proud. And, I would want to thank all our seniors, the late Patel Saab, Soli sir, everyone, right, for allowing us and guiding us to be a part of the journey of the chamber. My congratulations to Ketan, to all the other office bearers, to Rajesh L. Shah as well. All of you, thank you very much again for allowing me this opportunity. All the very best. Thank you.
So now, as said by all the president, past presidents, Kirit being the backbone, Kirit being the journey. Now let us hear from Kirit itself the journey. Over to you, Kirit himself.
Yeah, thank you, Rajesh, for this opportunity. So, for me, it's a moment of joy to see a much awaited publication of the Chamber. So, I thank Chamber for giving me this wonderful opportunity to contribute. And before I propose a vote of thanks, let me share a good news first. This publication in 2 volumes is available at the concessional price of 3,100 till 31st March 22. Thereafter, it will be available at 5,650. So discount of about 55%. Yeah, the link is already shared in the chat. Yeah. So now the pleasant task of expressing my sincere thanks to various people. So on behalf of Chamber, I express my sincere thanks to Sri Porus Kaka for taking out time from his busy schedule and attending these release functions from the airport. With his blessings, I'm sure this publication will be in the library of each tax professional. So thank you so much, Porus Kaka, for this. I also thank Sri Vispi Patel for delivering a keynote address on the subject of recent development of transfer pricing. As it is said, the Rome was not built in a day. The same goes for this publication. It took more than 2 years to see the light of the day. An idea was born. Rajesh P. Shah, as chairman, initiated way back in the year 2019 under the presidency of Hinesh Bhai Doshi. Several meetings took place to structure the content. Then his successor, Rajesh L. Shah, took the baton in his hand. The COVID really halted this project. And when the impact of the COVID was slowed down, in the month of March 21, we shoot out mails to the authors to write the chapter or update the existing chapters. I acknowledge untiring efforts of the team under the leadership of Rajesh L. Shah, Rajesh P. Shah, Sri Anish Thakkar, Sri Ketan Vajani, Sri Vispi Patel, Karisma Patarfekar, Sri Hinesh Doshi, and Bhavesh Dedia. I recognize the presence of senior Sri Vaithiswaran in this meeting, Sri Soban Kar, and Sri Hinesh Doshi. I also recognize the presence of all authors who are present in this session. I thank each and every author for taking out their valuable time in spite of facing challenging time of the COVID and professional commitments. They shared their knowledge by contributing an elaborate chapter in this publication. And last but not the least, the publisher Taxman. The publisher worked hand in hand with us to deliver a fine publication in a short time. So with these few words, I really acknowledge contribution of each and everyone for this publication. And let's hope this publication finds a place in each and everyone's library. Thank you so much. Yeah, thank you. Rajesh.
So now,
yeah.
Karishma, if you want to add something.
Yes.
Oh, yeah. So thank you, Rajesh. First of all, thank you, Vispi. Thank you, Inish Bhai. Thank you, Ketan Bhai. And thank you to both Rajeshes for giving me the opportunity to be part of this wonderful project. I think, I have a special place in my heart for Chambers because I owe it to Chambers that many years back, when we were trying to grow as professionals, Chambers gave us the platform to come forward, to share, and to also gain knowledge from others. So first of all, I would really like to thank the body Chambers of Tax Consultants to really encourage professionals in each and every field to come forward and contribute. So thank you so much for that. On the point on the TP Compendium, transfer pricing is been my passion. Law is now my second passion. So transfer pricing and law, and I must say that law is my passion because of Vispi. He has been a mentor for me.
he helped me start my career in law. So thank you, Vispi. I think this compendium will really benefit. Despite of being part of the committee, I must say that when reading some of the articles of the compendium, when we were reviewing, there is so much to learn. Even after 20 years of transfer pricing, I could really learn a lot from some of the articles. So I would like to thank the professional friends who have contributed in this compendium, because we may all feel that we know everything, but really knowledge has to grow each and every second, and that can come out from the way this compendium has shaped up. Because this compendium not only brings to light the legal aspects, it brings to light the technical aspects, the global aspects, industry experts, and the future of transfer pricing. So I would say that this publication is a must-have for all the tax professionals, not only in India, but I would say globally. And therefore, with all the efforts that have been put by all the people here and the people at the back, others who we named and the authors, I'm extremely delighted that this publication has seen the day of light. And thank you, Chambers, for giving this opportunity to me. And thank you for bringing this publication to light. So thanks a lot.
Thank you once again to all the people who were part of this journey. Apologies whom we could not recognize, but the intention is to thanks from the bottom of the heart each and every author, each and every hard worker, each and every volunteer who is part of this journey and will be there for the edition number 4. With this, I thanks once again everybody.